There you have it, the sound of the closing bell at the New York Stock Exchange.
It, of course, signals the end of the trading day on Wall Street. It was kind of up and down for the markets. The Dow Jones Industrial climbed about 30-some points.
The S&P 500 ended the day down at around 0.5%. The tech-heavy NASDAQ also fell roughly 1%.
Let's bring in Kristin Myers now for more on this. She is the editor-in-chief at The Balance. Welcome. So tell us what's driving the markets today.
Yeah, so right now investors are really holding their breath, essentially looking out ahead to a couple of pieces of economic data that really is going to make a lot of movements in the markets. The first thing that's going to be up is Thursday. The Consumer Price Index, that's the CPI, is going to be released by the Labor Department. And that's essentially going to tell us how much prices have been going up since last year. So that's a very key and important inflation information that we'll be receiving. And of course, investors are going to pay a lot of attention to it because we're going to find out if what the Fed has been doing with rate hikes has actually been working. Next day on Friday, we've got retail sales coming up, and that's going to determine if consumers, you and me and other shoppers, are essentially spending less money and buying less because of inflation. And all of these things will work into this giant recession picture that we really have going on, and will tell investors what the moves from the Fed is going to be going forward.
And Kristin, taking a more global look, the IMF's latest World Economic Outlook painted a kind of bleak picture for the global economy through 2023. How were the markets reacting to this new report today?
Yeah, it's not surprising to see the IMF come out with a pretty bleak, as you were mentioning, picture. I mean, global growth forecasts have been absolutely slashed. They're about half of what we have seen just last year. I think it's about the worst picture since the early 2000s, really. And of course, investors aren't taking kindly, especially because the IMF said that, listen, these rate hikes are really essentially hampering global growth. And they're part of the reason that we're actually facing this risk of not just a recession here in the United States, but a recession globally. And this is something that investors have really been worried about and concerned about for such a long time, that the Federal Reserve, that our central bank, is hiking rates, frankly, too aggressively, and that it is going to send us into a recession. Will the Fed be able to pull it out and put us in what's called a soft landing, where we avoid a recession? That remains to be seen, but there's definitely going to be more painful times ahead. The IMF said it, the central bank has said it, business leaders like Jamie Dimon have also said it.
Now, that's obviously something that we're all very concerned about and paying attention to. It almost feels sort of counterproductive at some point to talk about the market's movements day by day, because now it's back in the red after some short-lived gains, but every day it seems to be a different story. So what really needs to be done to kind of stabilize the markets for a sustained period of time?
Yeah, listen, if you are someone who is looking at your investment account every single day over these past couple of days and plan to do so in the future, I'm going to save you some headache and some heartache right now. Stop doing that. Please put your phone down. Stop looking at that 401k account, because you are going to just be hurt over and over again. Listen, right now we're in a bear market, and there's going to be swings, volatile swings, on a daily or even weekly basis. There's nothing to be done about that right now. Investors are going to be looking out at every single headline. They're going to be looking at GDP numbers. They're going to be looking at inflation numbers. They're going to be constantly weighing the risks of a recession. What's to be done to stabilize the markets right now? It's honestly to stabilize the economy right now, which the Federal Reserve is truly trying to do, of course, by raising those interest rates. But I think the one thing that I can tell all investors and everyone that is out there, these swings are to be expected. They do not be too concerned. And please put that phone down. Stop panicking every single day, because you are going to really stress yourself out.
Right.
Oh, that was a lesson I learned recently with my crypto wallet. I stopped.
No, don't even look at that.
I was like, you know what?
Your NFTs, forget about it.
Later. But Kristin Myers, thank you. Thanks for joining us.
Of course.